Today, we will talk about the Altman Z-score, what it is, formula, and how to interpret results. Let's learn about the Altman Z-score. The Altman Z-score is the output of a credit strength test that gauges a publicly traded manufacturing company's likelihood of bankruptcy. NYSE Stern finance professor Edward Altman developed the Altman Z-score formula in 1967 and published it in 1968. The Z-score uses 5 financial ratios to predict the likelihood of a company becoming insolvent. Over the years, Altman continued to re-evaluate the Z-score. In 2012, he released an updated version called the Altman Z-score Plus. This score has become a reliable measure of calculating credit risk. The Altman Z-score can be calculated using a formula that takes into account working capital, retained earnings, earnings before interest and tax, market value of equity, and sales. A score below 1.8 signals the company is likely headed for bankruptcy, while companies with scores above 3 are not likely to go bankrupt. Investors may consider purchasing a stock if its Altman Z-score value is closer to 3 and selling, or shorting, a stock if the value is closer to 1.8. In 2007, the Altman Z-score indicated that companies' risks were increasing significantly and may have been heading for bankruptcy. Altman's calculations led him to believe a crisis would occur, and the meltdown, which brought about the 2008 financial crisis, began with mortgage-backed securities. However, corporations soon defaulted in 2009 at the second highest rate in history. Investors can use the Altman Z-score Plus to evaluate corporate credit risk. A score closer to 0 rather than 1.8 indicates a company might be headed for bankruptcy. A score closer to 3 suggests a company is in solid financial positioning. Here are 3 key takeaways. 1. The Altman Z-score is a formula for determining whether a company, notably in the manufacturing space, is headed for bankruptcy. 2. The formula takes into account profitability, leverage, liquidity, solvency, and activity ratios. 3. An Altman Z-score close to 0 suggests a company might be headed for bankruptcy, while a score closer to 3 suggests a company is in solid financial positioning. Hope this would help. Thanks for watching.